take over. Hey, how was Tuesday today?
Oh, interesting. Thanks, Scott. Hello, Andy.
Yes, very interesting. Hi, Scott. Hi, everybody. How are you?
Andy's thawed out since last week. He was
Oh,
frozen out.
before you move on, today was 80 degrees higher than what it was last week in the same day.
Yeah, get ready to
Crazy.
start getting sick. Here come the colds. Yeah.
Yeah, really.
Hello, everybody. Looks like they can see us and hear us on the questions panel. So thanks for tuning in. It was a very interesting day. We obviously got a few things to say about it. And so we'll get started here as people file in through the normal slides. All right, Trade of the Week disclaimer. Just a reminder that we, Trade Ideas, is a software as a subscription company, real-time alerts. And Andy and myself have been trading for probably 25 years now, and we've seen a lot. And we've got our own accounts. We trade our own accounts, but we also work for Trade Ideas. But doesn't really mean that this is to be construed as financial advice. So, not to be construed as financial advice. Save that for the brokers, the people who charge a fee and have to take a lot of tests to claim that. All right, let's move on. Again, we've been doing this a long time, and we remember, all right, I shouldn't say remember, we try not to forget that it's a very feature-rich program that can take a little time to learn. You're not gonna learn it overnight, and we can't really just drop one video or one phone call on you and just have you have all the knowledge. There's an ongoing process, whether it's trading the markets, learning new situations, or learning new features and how to make trade ideas work for you, whether you're a scalper or a swing trader. So a couple things we offer is every day Barry's room. If you're not in there, it's free. There's no reason not to be. And you know, Barry takes his time and it takes time to answer your questions if you have any and demonstrate them visually. It's much better than, you know, trying to talk about something over the phone, which we just don't do. Afternoon webinars such as now, we have more contrived content, but we still try and do our best to answer questions if we can. And then of course the daily support sessions, of which I did mine today at 12 Eastern. Each day, if you go to that website below, which I just covered up there, trade-ideas.com live, that's a redirect to the YouTube channel. And once you've watched that, you know, noon webinar a couple times, YouTube will remember you and serve it up for you on your dashboard. It's pretty cool. That's how the world works now, machine and combined, human and machine. You watch the same webinar a couple times, the machine knows that's what you want, it serves it up to you, and you've got curated information at your fingertips. And so that's the world we live in now, and that's really what Trade Ideas does for the financial industry, for traders and investors in real time. And well, there we go. Let's get started. As I said, we've got some contrived content usually for the Tuesday webinar. I'll start out doing a market recap. Today was a real doozy. Got some thoughts about it. The AI recap had some good trades in there, and you will pull a couple of interesting things to learn from, which is really the whole idea as well, just to learn from how these trades work. And then the trade of the week, which thankfully didn't gap up on us for once. It triggered the old-fashioned way, and then the market just went bonkers shortly thereafter. I'm gonna go back to our favorite scan that most people probably have a copy of, and that's where we've been getting our trade of the weeks, which is the A table. And I've got a couple tweaks to show you so we can demonstrate some more trade ideas functionality here and apply it to how we want to see things and take a different perspective and maybe find things we couldn't otherwise have seen. And then, you know, the jam down scan, I'm going to remind people again, another functionality of the flip feature to take something that works really well in a bull market and show you how to invert it and then just put it on the shelf and save it for when we do have a bear market, which is a perfect segue into the market recap for the day. There it is, the SPYs in all its glory. And you've heard me talk a lot about these rug pulling days where at any moment, you know, the market can get a little ahead of itself or for whatever reason, just throw in some big red candles, some big red down days, only to generally just kind of pop back up and recover. I mentioned in the noon session, a lot of people do attend that one as well, that, you know, me as a swing trader, and Andy will fess up too, will tell you that these last couple of weeks have been very hard. Even illustrated with the gap ups that we had in the trade of the week, they blow up a trade situation, the volatility, these rug pulls kind of clear the decks on the ones that aren't working for you. I mean, let me illustrate. There's something I stayed in today. I sold a couple things I didn't like, and I stayed in a couple of things I did like. POW was one of them, ammunition maker. At the end of the day, and again, guys, I focus on the end of the day candle. How did it close? Well, in the moment of the market being down as much as it was, it's not easy. And my point to illustrate this is that when the S&P was down 1.516% today, POW was down about 15%. So the point is, it has not been easy. The market doesn't really demonstrate the volatility that's been happening under the seams, under the currents in individual names. You can have a really, really bad morning with just a simple 2% rug pull in the Nasdaq or the spiders, especially if you're playing in the smaller cap stuff. But when we look at the trade of the week in a minute, we'll see some serious volatility there. But when we start to get like this, I like to trade when I can kind of measure and feel the pulse of the market, not when the market's grabbing me by the collar and shaking me around. When that starts to happen, I just say, well, great, I'm just going to pair off a lot of these other things that aren't working. I'm going to go to silver, which I've been in for a while. I'll just pull that up, the PSLV one, which was the trade of the week 3 weeks ago. Not pulling back. It's, if anything, it's showing signs of wanting to move higher. It's a ETF that tracks the physical silver much better than the SLV ETF does. But the point being, when the market gets like this, I don't really want to play that game. And so, you can always go to 30% size, 40% of your normal size and try and compensate for the volatility. But again, I don't necessarily like to do that. I want to let things set up and then move for me. So where I'm going with that is, the open this morning was a nasty gap down, and the buyers, as expected, jumped in, and then we had a little I'm going to call it confusion midday here. As I was doing my midday session, I said, well, the price is back down below our key moving average here, and our key moving average was holding the price down, and then as soon as I signed off, market pushed back above, gave us a couple closing candles above that moving average, and that was it for the day. The buyers felt like they had control, and hey, once again, what we've been doing just continues to work. Let's just do it again. But a little bit of confusion in midday, and I told people that if this market doesn't show up and all these people that bought back here literally have been conditioned to do it, it's just what you do now. It's just what you do. You see it in the candle history. If that didn't work, they would have had a conundrum at the close where, if it didn't work, they'd be like, oh, did I make a grave mistake? And that's when things start to really unwind. Well, we didn't get that. And of course, by the end of the day, it had a really nice push higher. Anybody that did throw on the shorts probably had to cover. The one thing I do find interesting, you guys know I use this blue line a lot. It's basically a 5-day moving average on the 15-minute time frame. And a lot of times it becomes a level of interest. In this case, it kind of threw the brakes on there in that end of day, rally into the close. So, a great stick save is what I like to call these. Another beautiful stick save by the bull market, resetting a lot of charts. I will say, however, that doesn't really reflect it in the IWM, but a lot of the names that I've been looking at, oh boy, we could just pull up a few names here. I do want to talk about this. These are like some old electric vehicle names that have just been decimated over the last couple of weeks. And Andy did a pretty good job in our fund. I'm a witness to it, shorting Tesla. Back here, when you noticed, it broke the moving averages. It looked really darn good right here, and it could have easily pushed higher. But once these things broke, I think a lot of these other small cap electric vehicle makers broke too. And I think they're done for a while. It's going to take a long time for a lot of these small caps that have been really going crazy to reset. UAVS was a fun one I played in, made a new high up here in 17, had a great trade on that one, got out of it that day. And ever since then, it's just been crumbling back down and just keeps breaking through all the levels of support. So I think this is indicative of really what's going on in small cap land. If you're somebody who's really enjoyed playing small cap lately, be very careful going forward. A lot of these things are broken, which really brings me back to the general thesis of the market. I went to a lot of cash, silver, and a couple of small plays that I'm keeping, and I'm going to wait and see how things go and set up. Just looking at the Nasdaq, same story, although more damage was definitely done in the Nasdaq. When we look at some of the things like Facebook, well, a good recovery today, but Tesla for sure. Apple has been quietly breaching its moving averages, but a really nice long tail today. So this very well is going to wind up to be possibly another beautiful bottoming tail from which to build on. We'll see. We'll know shortly how the price acts when it gets into the armpit here of these bellwether type stocks and indexes alike. So for the time being, we got our stick save on the day, but the couple of days, let's see how the market reacts. Looking at the cues here, let's see how we react up here as the moving averages curl over and start to pounce on the tops of these candles. So I know I just dropped a lot to talk about there, but that's my thoughts on the day. Anything you want to add to it, Andy? I know it's been hard too for swing trading.
Yeah, and I'm like Steve, and as a matter of fact, I've been saying it in the webinars too. I think I told them in mine that I was short Tesla and had some SDSs. I did cover my Tesla today. One was, half of it was a real good cover, but and then I
The
tried
first
to
half
hang.
is right there.
Yeah, and then finally,
Half is right there.
Yep. And boy, yeah, it's not a market you want to stay short and stubborn in. I think at some point it's going to change. Well, obviously, it will at some point. Just who knows when. But yeah, it felt good to pick off a short in Tesla anyway.
Mhm.
But
Well, yeah, like
no,
Michael said, Michael told him today, he goes, Andy, you're probably one of the few people who literally made a decent profit on the short side in Tesla. So just be
that's
happy.
true. Yeah, that's true. But Steve, I mean, I'm like you. Honestly, be honest with you guys, Steve and I get frustrated because it's always healthy for the market to have a nice, good, even 10%,
More than a
15%
half a day.
pullback. Yes, yes. This is what makes it hard. It's when it needs to correct and it just keeps playing these games and kind of waffling around, sideways. And if you look at the Qs and SPYs, yeah, the candle looked great today, but they're not out of trouble. They're both still below their, downward sloping 10-period moving average now. So yeah, especially the Qs. Yeah, that's they definitely have some reconstructive work to do for sure. So we'll see what happens. But if history wins, yeah, we'll be looking at highs again in 2 weeks. But we'll see what happens. One of these times it's not going to happen, and that's when the buy the dippers are going to get really probably hurt. But I am like Steve. I like to take my profits and keep it safe. Wait for everything to set up and
That's not to say it might not have been a great day, Richard,
no,
for day traders. It was a
sure.
great trading day. If you're somebody who loves to pop in and pop out, Barry's one of those guys. He doesn't like to take stuff home. Andy and I prefer the slower pace of things. And when things just go crazy, we just pull back a little bit and let things redevelop and reset up. But yeah, if you're an intraday scalper, today had a lot of nice movement for you.
Sure. Especially if you jumped in on those lows.
All
All right, I'll take it,
all,
and we'll go what I can over to, trade ideas. Now, keep in mind, let's take a look at the spiders and with the action she has to work with, because our AI, Holly, does not take any positions home with her. So up until this point, she's pretty much been a pure day trader. We do that for accounting purposes only. We don't want to sit there and take a position and have some stupid move, that can exasperate things. But so you had a gap down in the spiders, a lot of waffling back and forth. Let me pull up my little pink here while I'm doing this. So it's not a tough day. And we had a guy come in chat today, and I think he was paper trading it, but he was saying, like, I guess he'd been working with Chris, and he said, I don't know what to do conservative. I don't know what to go moderate, what to do. So basically, I think the gentleman is trying to just wants to hook it up and let it make money for it. And guys, I just want to be honest with you. It's not what it's designed for. It's getting better and better. It's learning. We're learning. Michael's doing a wonderful job with it, but up until this point, it's not designed for you to just click it on and go, golfing. So the best people that I've seen to trade it manually, or they let Holly get into positions and they manage it. So, but a gray box, if you will. So that being said, I discourage people to come in and just think they're just going to cut this on and walk away and it's going to make money. I did mention to Chris, as he was helping the guy, I said, well, listen, if you are going to do that, our back office does show that moderate risk is the best. It outperforms the conservative. So anyway, let's move on to today. I mean, it wasn't bad. Now, aggressive did pretty well, but like we're going to be taking that out. Aggressive is very dangerous. I will never taunt it, and I definitely will not talk about it as far
Did you
as
say
you
taunt it?
like.
Or
Yeah.
taunt.
Yes, taunt. Tout.
Tout. I think you meant tout.
Yes,
That's what I thought you meant.
I did. I said taunt. I
Keep
meant tout.
aggression.
I was hoping I could slide it by.
Sorry.
Yeah. Yeah, but yeah, never mind. I was going to say something goofy, but I'll let it pass. So anyway, at today, conservative outperformed moderate by a decent amount as well. You can see here the conservative is this column right here, okay, and this right next to it is moderate. And if I go over here and I toggle through my conservative, you're going to see moderate profit actually finished down $92. Aggressive finished 1100 to the green. So aggressive didn't beat conservative by that much, almost 900 there in conservative. And somebody may ask, what is conservative? What does it mean? Well, what it means is you get out for any exit reason that Holly gets out over here. This conservative exit reason, we have a column for it. So if you are playing with the AI, be sure to include this column so you can look and you can understand why Holly may exit in a conservative position there. Moderate, it means you hold the trade all the way until the end of the day. I think it closed, most of them close down around 10 minutes to or 5 minutes till. But it will stop out. So if you get a stop, it will quit calculating. Basically, you get the same stop as a conservative risk will. So you can see what happened here with the volatile market. Even some of the shorts or longs were getting stopped out. No, I take that back. Most of these are shorts. Let me show you. So this stands to reason. I think we could take away from this. If you look at all these shorts right here that didn't perform that bad or performed very well in conservative mode, you can see if you stuck in all these, you had some really big losers. You got stopped out of all these in moderate profit. All you got to do is look at the SPYs right here, and you can see probably why. So I think Holly was positioned today. I mean, a lot of the algos were set up for shorts. You can see the majority of the positions that she took today was on the short side. Not by much, but more than you usually see for sure. So I think she was probably set up for a decent day to the downside in shorts. But once again, like Steve said, the stick save, it came again. So I'll dissect here just one of them. Let me clear this off here and take a look at this ZI here, which I thought was a great call. Like it's a contrarian call. You can see the stock was actually up on the day. Okay, this was yesterday's close, and Holly calls a short right here at 59.10 from a strategy called Bond Shorty. So a really good one right there. And this one was actually held all the way till close to the end of the day there in conservative mode. That's why you do not see a big difference between conservative and moderate here, because in conservative, Holly held this pretty much all the way through the end of the day. It seems like there was a couple of more. Let's take a look at this try. That was actually a long, a decent long there. It was what we call a no pain trade. There's your signal, and it shot up, came back here. Steve's always pointing out, and so am I. We used to do this all the time at Today Trader. Look how it held that fast line, and pretty much could have held this one all day. Once again, there was a difference there between conservative and moderate profit. But you can see the majority of the wins were on the short side today, 3 out of 4. And if you look down here on the downside, being stopped out. So even though the market had definitely came off its lows and finished pretty strong on the day, you can see the shorts actually outdid the longs, and that could have just been from the volatility of the market, because it's pretty nasty out there today. All right, Steve, I think that's it.
All right.
I'll pass it back.
I'm not sure which type of windows you're talking about, Richard. Maybe you can let Andy know. You'd have to open several. I'm sorry, I didn't understand your question. We'll do
Okay,
our
I have
best.
keep several open to get the info. What to say? How to build.
I don't know if you mean the single stock window or a single
Are you talking about
scan.
Holly, or is he talking about when? Let's
Oh,
see.
okay. Maybe if you're thinking just about all the different AI segments, what you can do is you can open a new one from your toolbar, AI strategy window, and then AI trades window. All you need is one of them. And then in both, you right click and you go to the segments and you select all. It combines them into all. And then this window, you can do the same thing, right click, segments, and all the trades will be combined into one trade. Not Holly. Okay. The info window with the short growth. Okay, this one, this is the single stock window, and it's always linked to the other symbols. So if you are not using symbol linking here, maybe that's why you're having to open many of them. But otherwise, if it's checked, it should just change along with all the rest of them. That's the
Yeah,
only
I
thing
know.
I can think of.
Yeah, Richard, I think probably what you're having a problem with too is, and I'll share mine with you. I'll drop mine into the chat window. I got a lot of fields in there that you can kind of work off of. If nothing else, to kind of give you like a template, because a lot of times if you don't get the borders right, you squish it in, you lose things.
Like this. Yeah.
Yeah, yeah. Or if you add a column, it'll shift everything. It's
Everything
really
over.
it's
Yeah.
wonky. Yes, it is. But I'll throw mine in there, and maybe it's something that you can work with. It maybe just kind of help to give you a better template.
All right. So moving on to the trade of the week. Going into the weekend, let's see, I had a couple of thoughts I want to talk about. Oh yeah, first off, notice, and this didn't pop up until Monday. Maybe some of you caught this, but I sure did. This is speaking of Richard, the single stock window. One of the best things we ever did was create the yellow warning and the red danger zone that we are getting close to earnings. And this was not lit up in yellow, and so I missed it on the weekend as we selected trade of the week. I just want to start off by saying that for sure. But zooming out here and looking a bit more at the daily perspective, that's a lot of nonsense these last 2 days. I'm going to tell you that right now. That is what we had to work with, and that is just something I'm going to pick every single day of the week. A beautiful, nice, pointed, consolidating spring, painting itself into a corner, whatever analogy visual you want to use, in a nice clean market. Remember, we didn't have a clean market the last couple of days. We had a chaotic elbow in your face market. In a nice clean market, we could have anticipated a nice trigger and a move higher through that. Well, you know, yesterday, at least on the open, we got a nice trigger, very nice trigger. Thought about it for a little while, didn't gap up and give us too much angst. And then the moving average caught it, and then boom, it went through. And this, I loved this. I thought, oh boy, we're gonna have a good one here. Volume confirmation, follow through. We got the whole thing there on yesterday as we moved through it. Here come the moving average, and then it failed and gave it back. And so, an ugly wick on the daily pretty much came all the way back to our trigger on the daily. And there's what it looked like yesterday. Really no harm, no foul. I was hoping for the best of it today, and then I don't know what happened. The red pull got pulled overnight, and that's just not the kind of open you want to see. And you can see the sell tag for me. That's me just saying, screw it. Like I said earlier, I'm not sticking around for this. I didn't sign up for elbows in the face. This is not the kind of environment I wanted to play in. So I'm just going to get out, and I did, and closed a bit higher, as we can see, and then bounced, got a hold of our moving average, went lower, and then back up higher. And once again, the reason I use this 130-day moving average, 130 candle moving average is kind of is an area of interest. Even happened there on Friday too. So pivoting back and forth between this 5-day moving average on that blue line, I just decided I didn't want any part of this. And I know when I say the stop is to not let the price close below the 20. Well, how do you know sometimes that when it gets below the 20, it's not going to close below there? And down here, what are you supposed to think? You're not. And so there's just really nothing you can do about that unless you're just going to wait and see what happens. But I didn't want to stick around and wait and see what happens, even though we bounced right back up with a giant hammer. And I suspect just about any chart people would want to look at, or any chart we pull up today, it's going to look like this giant washout in the morning. Brian Shannon had a good visual on Twitter, a GIF of a contraption grabbing the trunk of a tree, an apple tree, and just shaking the crap out of it and apples are falling out of it. And that's kind of what we had today in this market. The weak hands fell. I guess I'm a weak hand because we've been kind of waiting for a market correction. Like Andy said, we're just not used to these one-day reversals. You'd think we would be. That's the way the market's been lately. But Andy and I have seen way too many different cycles of markets to always just try and get glued into one thing. So that's my thoughts on the trade of the week, how it came about. If you are in it and you did decide to sit through that washing machine, more power to you. Just remember, we got earnings coming up in a couple of days, so keep an eye on that. All right, close to the bottom of the hour already. So what I wanted to do was talk about the A table. A couple observations here I'm going to go through. First off, it's not as dark as it used to be. I'm sorting it by short float, and the darker the colors, the more stocks we had with high short floats. We don't have that today. Just a quick illustration. Look, if I go back to time frame, historical, and just grab Friday, at close, I guess that'll work. Had a few more. Let me try and illustrate that a little better. Let's go to Thursday. I know there's a lot of stuff on there. No, maybe not. But the point is, a lot of things have been stripped back down from that. A lot less dark green is really what I was getting at. And a lot of those trades broke down and they no longer have the score. So what we're seeing here is kind of a limited vision of not a lot of stocks. And as I go through them, again, you guys know I like to look for consolidation. And as they just come up one by one, not all of them have perfect consolidation. If I wanted to bring in even more, one thing I could do, and I'm going to start by doing this, I'm going to make a couple of adjustments here. The stock composite rating is set at 80. Well, again, some damage was done, so maybe we should open that up to the C students, the C plus students. So I'm going to make that the first adjustment, and we got a few more names that came in. But again, when I go through some of these names, a lot of them might be a chase. Not really.
Ram said if you reduce it to 7, he sees it.
Sees what? More. I know what he's going to say. You're going to see what you're going to see is you're going to see more dark color because a lot of those stocks with the high short float fell into the 70s. Yeah, there they are. I know exactly what you're talking about. All right, well, so we'll go with 70. But the point being is the ones that have the real high score. Let's go. If I go back and look at some of these, I don't want to chase these. And so where I'm going to go with next, the next adjustment, and I'm going to show you guys that we can make. That's not bad right there. I like that. Mark that up. I'm going to show you how we can change the perspective a little bit here. Boy, that's another nice one too, but I don't want to get ahead of myself. So what I'm going to do is I'm going to say a lot of times as I've gone through here, I say, oh, no, I'm not going to chase, not going to chase, not going to chase, not going to chase. Well, somebody might say like that. Well, if you're not going to chase, why wouldn't you just add a filter? Well, I could try and add a filter that would look at a 5-day range and say, well, give me a compressed 5-day range. But trying to assign a filter value as my maximum, saying, well, I don't want to see stocks that have moved more than a 10-day range from high to low, a 5-day range, excuse me, from high to low to the amount of 10%. That might be a totally different deal at an $80 stock than it is for a $10 stock. So here's what I want to show you. Here's the big takeaway. We don't always have to enter a value for the filter. But if I'm in the interest of trying to say, I don't want to go through all those names and see all those chases, is there just an easier way for me to just see the ones that might be consolidating, which is what I'm really after in the first place? So I'm going to go to 5-day range, and we're going to grab this filter in percent right there. But we're not going to add filter. We're just going to show the column. And there it is. And that's all we have to do. And it looks like it's already in there from a previous attempt. And there it is. There is my 5-day range in percent. I'm going to bring this over just a little bit, slide it over so we can put it next to that. So now, if I want to do the Excel spreadsheet deal here and double click my 5-day range, that's the wrong end. That's a giant 5-day range, 79%. We don't want any part of that. Go back in the opposite direction. Well, now I've got all these tight ranges here. And I don't really have to assign a value of what I think might be the place to start. That's obviously an acquisition. And there we go. I love the look of that one 2 minutes ago. And one of the reasons is it's got beautiful consolidation. So right off the bat, we can look at this A table and we can look at this top list in many different forms or fashion. I'm not really concerned with who had great relative volume today. I'm concerned with maybe who has a high short float. Well, that doesn't really seem to be an issue anymore because we lost a lot of those setups. All right, well, now what prism lens do I want to look at this scan through? Let's find the ones that are consolidating. So all I did was add a 5-day column there, and now I'm sorting, and I can go through one by one and try and find some interesting names that might be setting up. Not every one of them is going to be perfect, but every now and then I might come through and find a name like that AON that I really like. That one's not bad either. All right, so, oh, there we go. There's another name that I like, AEO, and that's been a really nice 10-day range. You could even do the same thing with the 10-day range if you wanted to, but I would create a price there on something like that one. There's Dix, yeah, nice pullback, but not really what I'm looking for. That's kind of nice. I like that. See, this didn't give back a lot today. You know, things that just kind of held their consolidation today, I can now look at in a very easy fashion by just sorting by that. And then of course, the deeper I get into here, the more I'm going to be looking for things, the more I'm going to find things that have a wider range, and it's not really what I'm looking for anymore. All right, so that's what I wanted to show you on that. And this one was another one that we marked up a second ago. Yeah, sure. I'll put the configuration of this in, into the chat so you guys can see that. You don't see a filter for Smart Stop because I don't have it enabled on my charts, Rakesh. I'm just not interested in that. It's better for people who are not really sure what they're looking for.
I think he's following up on the question I just said.
I got you. Okay.
Yeah, I'll look around. I thought we had that, Rakesh, and I'll get back to you.
All right. That one did look good too. That one's not bad. Cool. All right, so let me save the settings that I've saved here, save and share, and I will put these into the chat window for those that want modified, I'll call it modified A table with some different filters or a different column. There you go, it's in the chat window. For a swing trade scan, are you typically finding stocks where you typically put your stop for your stop and sell points? Kevin, I'm typically looking for just something that hasn't run too far, something that looks like Cliff did, the trade of the week on Friday. Again, I'll zoom in. Things that look like that. I like consolidation above the 10-period moving average. I loved another stock, AR, going into the weekend before today. That looked pretty good as well. But there's no real one right moment trigger that a scan tells me the moment, hey, I should run in and buy this, other than, probably a good segue, the jam down scan, which we looked at last week, and I will load again.
Hey Steve, before you do that, can you just show Rakesh real quick? Just go to an A window, just to launch a new one, and show him, type in Smart Stop, and show him how you can add that as a column.
Okay, so search. So the Smart Stop as a
probably a percentage would be the best.
Percentage away. Okay, yep. So Smart Stop percentage, and then just show the column.
Right. And now when you see your top list, whatever you're looking at, and you see that Smart Stop column, that's where you can go in and manually add that price alert to this, you know, if you want to put it exactly where the Smart Stop is.
Let's do that with this thing I just made. Smart Stop 2.36%. Or would it give us, it's either going to give us the percent or the dollar and cents away from the current price, right? That's how it's going to be expressed. Is that
correct? Okay. So I guess you could use dollars and cents if you wanted to just subtract it from the price.
Yeah,
if you wanted,
that's probably the easier way.
Yeah, probably the easier way.
Well, we would go like this, and Smart.
A lot of them are 25 cents.
Yeah. Oh boy.
Let's see. So, and go ahead and add column and see. Show column.
I bet you it's going to be that.
Color. Yeah, that's why I was saying the percentages are usually the best. Oh.
$1.96. What?
Okay, good. Michael's been working with them, so maybe
we get a couple more returns in there. 52,
yeah, there you go.
19, 215. Yeah, okay, so you can
do
something like that. Hopefully that helps.
Hope you got that, Rakesh.
Yeah. So you want to answer Luke's question on the wiggle. I'm never really good at that. But what I'm going to talk about here All right, Rakesh is good. What I want to talk about here is the jam down buy, remember, was a new low on stocks that had strong bullish charts. And that new low was only going to show me things that came into play right at the 10-period moving average. Now, what was probably going to happen today in this particular jam down to the 10 is that a lot of things blew past those numbers quickly and just totally blew out the trade, because I'm not even going to bring it up because that's definitely what happened. So I started to think midday, geez, if this market does roll over at some point, I don't know, tomorrow or next year, there's no time frame, but at some point, buying the dip is not going to work like it did today. All right, it's just not going to happen. And so the beauty of trade ideas is sometimes we can just take a strategy and just flip it upside down. So at some point, there might be a market where it's just, you're just sick of the sellers, man. You're just so sick of these sellers. And then you start to notice that you get a day where the stock opens up and false hope runs in and the big green candles show up and they stop right at the declining 10-period moving average. Well, this is a short selling strategy. That's the exact inverse in methodology of what the jam down buy is doing currently. And so I thought, well, geez, maybe it'd be nice to show how easy it is to do that. Well, I tried to do that by taking my jam down buy and then hitting the flip button down here, which I've already done. It flipped it from a new low to a new high. Remember, we're going to fade that high, but I wasn't getting any returns. And what I had to do to get some returns was I had to take out the score filter. The score filter didn't invert. Did you know that, Andy? The score filter, it did not invert, which is interesting. So,
oh, it is interesting.
Yeah, I thought it might invert to like 20 or something, but no, it's just, it doesn't work like that. So I took that out altogether, and then I just said, well, why don't I just add, or maybe I'll have to do that right now. Something that just tells me this stock is not very healthy. And what I decided to do for that was what I've talked about a lot. The 50-day moving average is kind of the general health of a stock. Is it above the 50-day moving average or is it below? So if I added that filter and just said it's no maximum value of 0, can't be above the 50-day moving average. If we work with those stocks and maybe find some that are making a new high, another thing I had to do, this is the other thing I had to do, Andy, the change in 20 days on the jam down was a 10% up. These were stocks that have moved up at least 10% in the last 20 days. That didn't really seem to show up well in this scan, so I cut that in half to show stocks that have been at least down 5% in the last 5 days. So those two things combined kind of ensure that these stocks are not very healthy stocks. And in doing that, started to get some ideas. Okay, well, I'm just going to start with this one and just end with this one because I think it's probably the best one of the day. So if I open up this chart here, here's a stock with this making lower highs on the daily, and it's under all its moving averages. Well, today it tried to buy and sucker everybody in, and it jumped right up to and gave us, what was the value? 82.70. Where's 82.70? Wow, pretty much the high of the day. I'll just call 69 there. So it's doing the same thing that it did for us on the jam down buy. It can give us some really interesting areas in the early part of the day to fade. But again, this is a short selling strategy. And at some point, you guys, we're going to see chart after chart that just look like this. They're just, the sellers, it just won't let it. It's like a bouncing ball, just looking for the way down. And if you're going to be the one wanting to make money and time the jump rope, or the surfing analogy, those are the levels at which you're going to want to be shorting and paddling the canoe in the correct current. If you're trying to go along these things on the open and get suckered in, you're just paddling against the current. Now, that's not what's happening currently. We are currently still in a raging bull market, as indicated by today's closes. So again, the purpose of this was just to show you that Trade Ideas does have the ability to help traders turn on a dime and help, adjust. So I'm going to suggest you guys take this and then put it on the shelf. You might need it in a week, you might need it in a year, I don't know, but at some point, just remember, this is the kind of thing, jam up and sell the 10 SMA. I even named it for you guys. All right, right click and then save and then jam up. And I'll drop this, of course, in the social media channel for
While you're
people
doing
who
that,
are
I'm
watching
going
this.
to explain Wiggle a little bit. It's just kind of hard to put it in writing.
Okay.
Yeah, so Luke, yeah, I used to use that wiggle, and what it is, it's an algo that factors in the volatility and volume of the stock and the average true range. And if the stock like comes down pretty fast on very little volume, it will give it what's called a little wiggle. And I did this for a while because I was getting better back tests with it, but then I found out one time. I mean, I saw some of my results in the back test, and I noticed a wiggle. I saw a couple of wiggles around $1, and I'm like, "Ooh, this is strange." So I've talked to Michael Noss about this as well, and he found the same thing. So I really don't recommend using it. I just like to go with the straight percentage, stop, because it's dangerous. And it's hard to convert also into, if you were to ever go like to live trading, auto trading. It's kind of you really don't have that option because, and it's kind of wonky. I wish we didn't even offer it on back testing if we can't offer it in live trading, but that's the way it is. But anyway, I wouldn't recommend it. Okay, so thanks.
Yeah, somebody, and by the way, I was typing to, let's see, first off, Buck, what did not invert when I did that jam down inversion and flip? The score. The score is a composite rating based on like 15 different points, and so that just stayed as it was. So I had to take that out completely. And then the other thing was I had to dial back the change in 20-day change. I had to loosen that up a little bit as well. Those are the only two changes I made.
Yeah, and probably the reason the score doesn't work because the low end of the range is 30.
Yes, it's
Now,
not
if it was
inverse.
zero, yeah, if it was zero, it probably
it's not a true invert.
Right.
Bell curve.
Mm-hmm.
Okay. Glenn said the jam down worked great today for BG. So right down. Yeah, this is, matter of fact, that's a nice looking chart too. I'd probably mark that one up as well. It's a very nice looking flag in that one. But typical bull market jam down. Get the new low. It went a little bit lower and then popped back up into play. But good to know that's working. All right, guys, so that's really all I've got today. You know, I could say, send me your charts right now and let's take a look at them, but I'll tell you what, they're all pretty much gonna look like that. They're just gonna look like Cliff. They're all gonna have long tails, and it's just kind of a matter of where did it close. Look at your chart and determine, did it close in the 50 range or higher, or did it close under the 50-day range? There's really not much we can do to look at charts today because it's, like I said, things got washed out and broken. And let's just see where they go from here. So I'll go ahead and bring Scott in, and he's got some final announcements. And info at Trade-Ideas, of course, is the place to get your support tickets handled.
Yep,
all right.
That's right. Yeah, thanks, Steve. On the way out, let's just remind everyone that they can grab an ebook. Go to TradeIdeas.com/earnings. That's a very informative ebook all about earnings season. We've also got a podcast. Search for Trade Ideas Podcast wherever you listen to your pods. Add us as a subscription. Get the newest episode. Get ready to get the next one. We've also got a promo code opportunity. It's good this month for 15% off your first month or year of any subscription. So go ahead and grab that. You can also use it to do an upgrade from standard to premium. And you can find Steve on Twitter at TodayTrader. Also find us at Trade Ideas, Facebook.com/TradeIdeasPro. And send all your questions to info@TradeIdeas.com. Goes into our help desk, gets you the support you need. So you get an email tomorrow with a link to the recording of this session. So stay tuned for that. Thank you, Steve. Thanks, Andy. Have a good one.
All right. See you tomorrow. Bye-bye.
Thanks.